terms of vol space, you can see the charts are a little bit different now. We are playing around with some other analytics providers. So basically, we've got carry back to positive, crypto realized vol, which you can see. This is 7 days. So I've got 7-day realized versus 7-day implied, and I've got the differential as our kind of carry number here as the spread. So generally, we're stepping lower in terms of realized back into the mid 40s. Ethereum, similar story, got up to 80 odd, but that also got into the mid 40s. So realized trading down throughout the week. Implied was following it into the weekend. We did see some quite low levels of implied, but then we've obviously seen that bounce as the market ripped higher. It's taken vol with it, and that's why we're back into positive carry. So you're seeing green here and green here. Even though we're back in the middle of the range, it doesn't feel to me like a great time to be short gamma right now, with quite a lot of headline risk out there between sort of the macro fundamentals, the politics now with this violence that's erupted, the flow dynamics of, you know, the Mt. Gox selling and obviously the ETF to come on Ethereum. It's going to probably keep crypto moving around in the near term. So I'd kind of want to see whether these ranges reestablish themselves before kind of leaning on them too much with any fresh carry trades, basically. And, you know, I would expect some sort of volatility around the Ethereum launch date as well. You know, maybe we get some more speculative buying that drives the price higher into next week on Ethereum. So also watching out for that. The chart here, we've got, what have we got? We've got the time series of implied vol across all the different maturities. So I'll show you. So the nice thing about these charts is we can see kind of how it evolved throughout the week, right? So you can see here, we had the long end up there at 65. It's kind of finished the week at the same place, kind of done nothing, right? The front end, because the curve was quite flat at the start of the week, we had sold off. The front end traded all the way down close to 40. So a complete collapse of the front end. That's the 1 week vol. And then it's had a sudden spike back up into the 50s there. Yeah. So you can see the curve steepened massively into contango, where we had, you know, this is the very steep part of the curve going into the weekend, where long end vols up here, short end vols down here. These are each of the different maturities. And then you see that front end jumping, and you see a much tighter, much flatter curve, basically, right? So you can kind of see it from two angles. You can see it like that as a time series through the passage of time. You can also see it here, where the term structure a couple of weeks ago, what the term structure looked like was this one. And then it's kind of been working its way higher. So we've got a flatter term structure here on Bitcoin with the front end there in the low 50s. And week on week, we can see week on week, it has traded higher on Bitcoin. Now, Ethereum, not quite the same week on week, actually lower. See that front end vol actually dropping, but obviously compared to a couple of weeks ago, the vols are higher. You can see there on the week, Ethereum front end vol was under a little bit of pressure. And you can see here that that's where the Ethereum vol started the week. Front end got slammed down to 50, has bounced, but it hasn't bounced quite as much back to where it was. And then that back end vol is still pretty much unchanged, and it has been like that throughout the week. So there's your kind of cross section of how the term structure evolved throughout the week and where it closed out the week, basically. But no major surprises. You know, we broke higher, we broke levels, we moved quite violently, and the front end got taken up with it. When the front end flattens like that, give it a few days, it usually does start to find sellers again. Wouldn't be surprised if we do see that, if we stabilize. I'm just not in a rush to sell gamma right here, right now, as I do think there's quite a lot of headline risk out there. Okay, this is our chart that shows relative value between Bitcoin and Ethereum. So the ETH Bitcoin vol spread, we can see a month ago was trading up at 15 vols in the front, moving down to kind of 10 vols in the back. And then you can see a week ago, it was a similar story. The back end maybe coming down a little bit here. That was this pink line here. And then finally, we got the front end getting hit down to 10 vols here. Absolute front end's even cheaper because that's more in line with realized, which is about 5 vols. And then we've got about 8 vols there in the back, basically. So we do have compression of the ETH Bitcoin vol spread over the course of the week, going from about 12 vols in the kind of August bucket down to about 10 vols. We do think that has got the potential to go even lower. So this curve's probably going to look something like this, shifting down to around 5-6 vols after the Ethereum launch, if we haven't had some ridiculous move that's triggered a load of volatility and load of uncertainty in ETH, I would expect the vol spread to continue to normalize. Now, another reason why the spread did drop down, well, the main reason was because Bitcoin vol spiked because of the Trump effect, right? So this Trump effect had a bigger impact on Bitcoin. Ethereum, obviously still already a bit elevated because of the potential anticipation of the ETF, but it was really Bitcoin vol that caught a bid, which compressed this spread back down from its highs. And the ETH Bitcoin spot spread does look kind of primed to break higher. If we were to get that launch and get some decent inflows, then I wouldn't be surprised to see a bit of a break higher there. Okay. But the implied spread at this level is still trading above realized, which does leave the door open for more of a vol reset in Ethereum next week. And then looking at skew, we've also got the time series here of skew on Bitcoin and on Ethereum. You can see that the put skew in the weeklies, that's the red line, that was at 15 vols for puts. Start of last week, that has gone all the way back down to 0. So put skew evaporated. ETH was more at like sort of between 5 and 10 vols, and that has now come down as well. In fact, it's got slightly into call territory by about a vol point. So that's where we are in kind of the 1 week skew. Obviously, a long-term skew you can see is kind of stable, stayed where it was at around kind of 8 vols, something like that in the back end there in the 1 year skew. So no change there. It's really just the skew seems to have converged a bit. So it's in the front end especially. So it was already quite similar in the back end, but in the front end, we did have more of a put skew in Bitcoin. We had a bit more of a call skew in Ethereum, reflecting the ETF launch that was coming. And basically, it looks like the options market seems to think the Trump factor now is a positive enough narrative for Bitcoin to compete with the Ethereum ETF launch. So now that means the skew is kind of converged and the skews are trading in line with each other, basically. So that's kind of what the crypto options market is saying the right tail risk now is equal between the two assets, because whilst, yes, we've got the inflows to come on Ethereum, we also got this Trump effect for Bitcoin where, he's going to be more friendly from a regulation standpoint. He's just more pro-crypto in general. And that has been taken quite well by Bitcoin. And that's why the skews have kind of normalized to some extent there. Okay, that is vol and skew. Now, if we look at flows, volumes are down quite heavy, about 25% down to 7 billion on Bitcoin. We saw two-way flow on December upside calls in that kind of 100K strike zone. That was the biggest sort of more active strike. We saw buyers of call spreads, 85, 120 call spread to December. We also saw this red bar, which is the March 25 100K calls as a buyer as well. In the local vicinity, we generally saw sellers of call spreads and sellers of put spreads kind of bring in either throwing in the towel or bringing in some premium there, but in a protected fashion. And then on the deep downside, kind of 5,400 and below, we did see some out of the money put buying on Bitcoin. Okay, that is the flows I saw on Bitcoin. In terms of ETH, volumes were smashed as well, down 33% to 1.8 billion. That's pretty big destruction on volume there. Maybe it'll pick up once the ETF actually launches, remains to be seen. Call flows did dominate again. They were the biggest clips, the largest clip being the 30th of August, 3,200 calls getting lifted, getting bought, probably playing the launch. We did see some closer to the money stuff being sold on 3,100 strikes. Obviously, were say close to the money at the time. Now we've traded up through all those strikes. And then we saw put spreads and call spreads for sale in July, relatively local stuff. People, I've got some short put spreads on as well on Ethereum. That's a smart way to kind of earn some premium, lean on the fact that you think it's rallying, but not take too much blow up risk, basically. So people doing those sort of trades. Okay, that is the flows.
Hi, everyone. Thanks for making it to the end of the video. Remember, this is just a little taster of what we do at Options Insight. To get access to all our research, including my in-depth vol market insights, flows and positioning report, and my portfolio trades, and a whole lot more, you can sign up for a free 1-month trial at options-insight.com. I'll see you soon.